All right, guys, this is the one about getting your credit pulled. At least once a week, I get a call from a client saying, you know what, I'm looking to get pre-approved, but I'm not ready to get my credit pulled yet. Or they'll say something like, can you just do a soft inquiry? We're here to talk about a couple of things today. We're gonna talk about how does a hard inquiry on your credit impact your credit report? And we're gonna talk about why a soft inquiry credit pull is kind of useless. First, let's start with the big one. Let's talk about what happens when a mortgage lender pulls your credit. First things first, a lot of mortgage lenders are going to be a little bit dishonest with you, and they're going to tell you not to have your credit pulled by any other lender because it will damage your credit. Uh-oh, that is a red flag. If a mortgage loan officer is telling you that you cannot shop for your mortgage, that is a straight up lie. Back in the day, it used to be a thing where your credit would get dinged every time a mortgage person would pull your credit. Well, since then, the CFPB, the Consumer Finance Protections Bureau, has stepped in and made it easier than ever to shop for your mortgage. When you get your credit pulled and it's a hard inquiry, it's typically going to only ding your credit 3 to 10 points if it's one hard inquiry. If you are getting a hard inquiry done by a mortgage lender and also getting a hard inquiry done by a car loan company, that's going to count as 2 hard inquiries. So that could damage your credit by having too many inquiries done. However, if while shopping for a mortgage, you have one mortgage loan company, mortgage company A, pull your credit, and then 10 days later, you have mortgage company B pull your credit, those 2 credit pulls are going to count as 1 hard inquiry per the CFPB. The CFPB recognized that you needed to have an option to have your credit pulled more than once, so that way you could not be harmed by checking out what different mortgage companies have to offer. How great is that? Now, let's talk about the timing for the CFPB. So there's a few idiosyncrasies that you need to be aware of here. The safest period of time to make sure that your credit's not going to get dinged multiple times is 14 days. 14 days is the magic number to make sure that all of your mortgage loan inquiries count as 1 inquiry. The CFPB says you have up to 45 days. Now, that can get a little bit dicey depending on what FICO scoring model the lender is using. So to be safe, I always tell clients to make sure you do all of your shopping within 14 days, but you have up to 30 or 45 per the CFPB, where all mortgage inquiries will count as 1 hard inquiry. If you're concerned about having mortgage company or another lender pull your credit, you can have your credit report pulled yourself at annualcreditreport.com. Now, when you are pulling your credit yourself and a lender or creditor is not pulling your credit, then that does not affect your credit at all. So you can pull your credit as many times as you like and it will not impact your credit as long as you're doing it on your own behalf. All right, so now that we've talked about how hard inquiries impact your credit, let's talk about this bizarre thing that's out there called the soft credit pull. I get a call, it's at least once a week, where the client wants me to do a soft inquiry on their credit to pre-approve them to shop. Hey, listen, I understand you're not ready for a hard inquiry yet, but let's talk about the negatives of a soft credit pull. You can't close on a mortgage in the United States of America with a soft inquiry. At some point in time, we're going to have to do a hard inquiry to close on your mortgage. So let me just tell you a story, and this is a true story that actually happened. I had a client that had called me and really wanted to get pre-approved for a loan but didn't want a hard inquiry. At the Anna Smith team, we always do a hard inquiry to make sure that we can for sure finance the client. There is no reason to do anything halfway up front. So anyway, this client calls, ring, ring, and says, Anna, I'd love to get pre-approved, but I really don't want a hard inquiry on our credit. And I said, okay, I totally understand. There's no pressure here. I want to be of service to the client, but really, there's no way for me to do a lot for you without doing a hard inquiry. We can have a conversation, but there's no way to know exactly what you qualify for without doing everything up front, getting your documents, pulling your credit, and making sure that that bow is wrapped and tied pretty around your loan package. So anyway, the client decided to go with another lender because they weren't ready for a hard inquiry. So they went to this other lender, and that lender pre-approved them with a soft inquiry on their credit. Fast forward a couple of months, the client finds a home and goes under contract. Well, they were out shopping with a soft inquiry on their credit, weren't they? So they went back to that lender that did the soft inquiry for them. Now they're under contract. Guess what? It's hard inquiry time. Well, the co-signer on the loan had made a late payment in the period of time of getting pre-approved and needing the hard inquiry. So in 2 months' time, the credit score went down below lending limits. Bummer. So that client calls me back, as I'd been helpful to her and we were trying to help her at the beginning, and says, Anna, I need help. We no longer qualify for the loan. Can you help me? And I said, we will do the absolute best that we can. We had to go through an array of credit fixing, etc. Eventually the loan did close, but this poor client, the stress. Guys, if you're going to want to buy a home and it's your largest financial investment ever, please just do everything the correct way up front. A soft inquiry is not going to be good enough to close on a home loan, and that is why we always do a hard inquiry up front. It's good for 120 days. It gives you 4 months to shop. We don't pull it again until it's necessary. It's really, really important that you understand why a soft pull can be a negative to you. I'll also hear from clients a lot of times, they'll say, oh, well, I always pay my stuff on time. Well, I would never make a late payment. Soft inquiry would be fine for me. Y'all, there's a lot of fraud out there. Your credit could get stolen. Your identity could get stolen. Your social security number could get stolen in that period of time. And granted, even if we'd done a hard inquiry, that could still be a problem. But at least the hard inquiry is done and we're prepared to close on the house quickly if need be. Anyway, thanks for coming to my TED Talk. I hope this helps you understand getting your credit pulled, and I hope this helps you understand hard inquiry versus soft inquiry just a little bit better. If you have any other questions, feel free to reach out.